University of Mumbai, MCOM Sem 4, Personal Financial Planning, Question Bank Solution, MCQ Part 2. A good credit rating is established by option A being a nice person, option B making your payment on time, option C making your payment a little past their due date, option D not making any payment on your credit card. The correct answer is option number B, making your payment on time. So a good credit rating is established by making your payment on time. Which of the following is a disadvantage of credit? Impulsive buying. Option B, emergency. Option C, saving. Option D, convenience. The correct answer is impulsive buying. This is the biggest disadvantage of credit card, because once you have your credit card, you are tempted to buy so many things. But the credit card is also have its advantage in case of emergency. It saves you a lot of money and it is very convenient for the people who is using credit cards. Now let's see the next MCQ, MCQ number 28. An indication of the level of risk that someone could pose if credit were granted to them is called option A, failure rate, option B, risk management, option C, liability, option D, credit rating. The correct answer is option D, credit rating. An indication of the level of risk that someone could pose if credit were granted to them is called credit rating. Okay, so one can, if credit ratings is good, okay, so the individual is having the minimum credit rating criteria, then the person who is lending money to him, he can give the money to the person at a risk free. Next MCQ, MCQ number 29, a business that gather a credit information on all borrowers in a particular region for a purpose of selling that information is called as a credit union. Option B, credit bureau. Option C, bank. Option D, trust company. The correct answer is option D, credit bureau. The credit bureau is a agency type of a people who collect or gather all the credit information on all borrowers in a particular region for the purpose of selling that information. Next MCQ. You can start building a good credit history by option A, attending school regularly and getting good marks. Option B, getting a part-time job. Option C, buying a few things on credit and paying the bill promptly. Option D, becoming a regular customer at one store. So you can start building your credit history, a good credit history, by buying few things on credit card and paying that bill promptly or on time. So this way you can get a good score on your credit card, and this will help you in future for a loan purpose, for availing loans and all. Question MCQ number 31. One difference between a debit card and a credit card is that option A, payment, option B, debit card generate unsecured debt, option C, debit card can only be used for last transaction, option D, debit card provide better consumer protection. The correct answer is option A. Payment made with a debit card are immediately deduct from your bank account. So one difference between a debit card and a credit card is that option A, payment made with a debit card are immediately deduct from your bank account. If you keep poor records and write a check of more than you have in your checking account, you need option A, credit insurance, option B, overdraft protection, option C, a joint account, option D, credit scoring. The correct answer is option B, overdraft protection. If you keep poor record and write a check for more than you have in your checking account, you need overdraft protection. A revolving credit account is option A, open-ended account, option B, equity account, option C, installment loan account, option D, closed-end account. The correct answer is option A, open-end account. A revolving credit account is open-end account. Credit blocking occurs when your line of credit is reduced by the estimated cost of the anticipated purchase. Option B, when you return merchandise. Option C, when lenders are blocked for collecting your credit balance. Option D, when you are denied a credit card. The correct answer is option A, when your line of credit is reduced by an estimated cost of of an anticipated purchase. The correct answer is option A, when your line of credit is reduced by the anticipated cost of an anticipated purchase. Means when you go to the hospital and all, they do this basically to lock your money or to just whatever credit limit you have, they keep it on the block to pay for the services which you have not at used. Okay, next MCQ is MCQ number 35. You can increase your credit score if you: option A, successfully manage several types of credit; option B, borrow more; option C, have additional credit inquiries; option D, have a history of late payment. The correct answer is option C, have additional credit inquiries. You can increase your credit score if you have additional credit inquiries. Next MCQ number 36. When your credit line is reduced by the anticipated purchase, this is known as: option A, credit blocking; option B, a discounted payment; option C, charge back; option D, a payday loan. The correct answer is option A, credit blocking. So when a credit line is reduced by a anticipated purchase, this is known as credit blocking. Okay, so now what is credit blocking? A credit card block is a reservation of a portion of a credit or debit card balance for the cost of service not at render. Credit card blocking is most common in the hospitality industry. However, it is also used by rental car companies. Next MCQ number 37. Given a lost or stolen card, your potential losses with a debit card are: option A, greater than with a credit card; option B, the same as with a credit card; option C, less than with a credit card; option D, negligible. The correct answer is option A, greater than a credit card. So given a lost or stolen card, your potential losses with a debit card are greater than with a credit card. Under the simple interest method, interest is based on the outstanding loan balance. Option B, deducted from the initial amount borrowed. Option C, prepaid. Option D, added to the initial amount borrowed. The correct answer is option A, based on the outstanding loan balance. Under the simple interest method, interest is based on the outstanding loan balance. Dash allow you to purchase something right now that you are unable to pay for upfront. You have to borrow money from a lender and pay it back. Option A, a credit; option B, interest; option C, principal; option D, capital. The correct answer is option A, credit. Credit allows you to purchase something right now that you are unable to pay for upfront. You have to borrow money from a lender and pay it back. Okay, so correct answer is option A, credit. Or credit. So the credit allow you to purchase something right now, and you can pay for it later on. So this is the biggest advantage of credit card. So you don't have to worry that you should have a money right now in your bank, but you can avail this credit. Right now, and then you can means you can avail the service, or you any items which you want to purchase, you can purchase it on the credit card, and without worrying it payment for its payment on particular day, but you can pay it within the 30 days or as the limit prescribed by your on your credit cards. Next MCQ number 40. A numbers that represent a risk a financial institute will take in loaning a person money. Option A, credit card; option B, credit report; option C, credit score; option D, credit counsel. The correct answer is option C, credit score. So credit score represent the risk a financial institute will take in giving the loan to a person money. Okay, so based on the credit score. So what is credit score generally? So when you buy something on the credit card or you avail some services on the credit card, you pay that bill on time. Okay, so whatever limit is there, within 30 days you have to pay, or within 45 days, or within 15 days you have to pay your bill. The customer who is having that credit card is making the payment on time, and this time payment is noted on the credit card score, and that in this is way you will able to improve your credit score, or you can make good score, and this can be helpful to for your future financial loan. Next MCQ number 41. An example of a revolving account is option A the student loan, option B consumer loan, option C credit loan, option D car loan. The correct answer is option C credit card. Okay, so an example of revolving account is credit card. A secured loan is backed by option A collateral of something of value posted by the borrower, option B money from the financial institute, option C, a promise to repay the loan. Option D, money from the government. The correct answer is option A, collateral or something of value posted by the borrower. Okay, so secured loan is always backed by collateral. Collateral means something you keep as a mortgage in your bank, okay, against as a security. It may be your own house, you can keep some jewelry, okay, so or your even your insurance policy, you can keep it as a collateral security to get a loan. Okay, next is option number 40, MCQ number 43. Credits allow you dash. Option E, purchase an item right now and pay for it right now. Option B, purchase an item right now but receive it later. Option C, purchase an item right now and pay for it later. So credit card allows you what? It gives the things or service on credit. Okay, it means that you can purchase right now as per as your credit limit, and you can pay for it later as per as uh, uh, as per between the period which is given by your particular bank. Okay, so this is you can credit allows you to purchase an item right now and pay for it later. What is a credit score? A number that represents how much money a borrower owes. Option B, a score from a test given to borrowers by lender. Option C, a number that represents the risk a lender takes on a borrower. Option D, an average of all of a borrower credit account. The correct answer is Option C, a number that represents the risk a lender takes on a borrower. So what is credit score? A number that represents the risk a lender can take on a borrower. So any financial institute who is giving financing or giving loans to the person or an individual, he will just check his credit score, and his credit score is good, he will land him a loan. Next question, MCQ number 45. What is interest? Option A, the fee that is paid to borrow money. Option B, the rent lender charge borrower for money. Option C, the paying of a debt with fixed repayment schedule in regular installment over a period of time. Option D, the non-interest portion of a loan. The correct answer is option number B, the rate lender charge borrower for money. So what is interest? It is basically a rate lender charge. So it is basically the interest rate which is charged by the lender to the person who is taking a loan from him. So the rate lender charge borrower for money. That is your interest rate. Next is, what is a credit card? Option A, a card issued by a bank or business allowing borrower to purchase good and service on credit. Option B, the non-interest portion of a loan. Option C, the fee that is paid to borrow money. Option D, paying off of a debt with a fixed repayment schedule in regular installment over a period of time. The correct answer is option A credit card issued by a bank or business allowing borrower to purchase good and service on good. So what is credit card? A card issued by a bank or business allowing borrower to purchase good and service on credit. Next MCQ number 47. Loan often require the repayment of dash. Option A, principal and security. Option B, principal and interest. Option C, equity and interest. Option D, asset and interest. The correct answer is option A, correct answer is option B, principal and interest. So loan often required the repayment of principal and interest. MCQ number 48. In India, the dash collect a record of an individual loan and credit card. Option A CBI, Option B CIBIL, Option C CID, Option D CIBI. The correct answer is option B, the Credit Information Bureau, India is the most popular of the four credit information company licensed by Reserve Bank of India. So Credit Information Bureau Limited collects a record of an individual loan and credit card, and is the most popular amongst the four credit card information companies licensed by Reserve Bank of India. Next MCQ, MCQ number 49. An individual credit history is submitted to Credit Information Bureau Limited by banks and financial institute on the dash basis. Option A daily, option B monthly, option C quarterly, option D yearly. The correct answer is option A daily. An individual credit history is submitted to a CIBIL, that is Credit Information Bureau Limited, by bank and financial institute on a daily basis. Next MCQ. Identify which among the following is not considered a consumer loan product offered by banks in India. Option A personal loan, option B car loan, option C consumer durable loan, option D bank overdraft. The correct answer is option D bank overdraft. Identify which among the following is not considered a consumer loan product offered by bank in India. The correct answer is option D, bank overdraft. Please prefer subscribing and click on notification bell icon for the next part. Thank you.